Okay, so you want to learn how to day trade in Robinhood. Let's talk about it. It could be difficult when you have to deal with the pattern day trader rule. However, Robinhood allows you to get a cash account. Cash account allows you to make unlimited day trades. If you want to day trade, you have to pick a specific stock or ETF that you want to trade. In this case, we're going to be doing SPY and we're going to be using TradingView as the charting software. TradingView is a free charting software for everyone to use. You can buy memberships which will allow you to get indicators. But in this video, we're going to be talking about how you can use indicators to make your charts look from something like this to something like this. By the end of this video, you'll be able to have your charts like this and be day trading like a pro. To open up indicators, we're going to click on this symbol here, and we're going to be using two indicators. The first one's going to be known as MACD, which is considered to be moving average convergence divergence. And this indicator is used to identify potential trend reversals and generate buy or sell signals in a technical analysis financial market. With that being said, here's the other indicator we're going to be using. You're going to go ahead and type in UT bot alerts. This is the one right here, and this is going to give you the buy and sell signals. This alone is going to improve your decision making in when to buy and sell. Now you will know when to enter the market and when to exit the market. Indicator alone won't give you 100% success rate. There's still a lot of things you have to know. Okay, now I've showed you when to get into the market. Now I'm going to show you how to get into the market. Now there are multiple ways that you can enter the market. You can buy shares, or if you don't have enough money, you could do buy in dollars, which will allow you to basically bet any amount of money that you want to bet. There are more complicated ways. Now this is called options, and this allows you to profit when the stock goes up or down. Whenever you do decide to buy, it's important that you get time. Make sure you get at least a couple weeks out. Now, each one of these are contracts, and these are the prices of the contracts. That's $200. I know it looks like $2, but in a contract, there's 100 shares, so you multiply that number by 100. Now, if you click on any contract, it's going to give you all this information. The IV is very important. You want it to be small because the more it grows, the higher price inflation you're going to get. The delta is how much money you're going to gain from owning that contract. Every dollar that it goes up while holding that contract, you want every contract to have a lot of volume and open interest, because that's going to allow you to be more secure about going in and out of the position. If you sell a contract, you have to have someone buying. So having a lot of volume means that there's a lot of buyers and sellers, and it's going to allow you to leave the position quickly, just like stocks. Just like being able to make money when the stock goes up, you can also make money when the stock goes down by buying puts. This is the exact same way as this calls. Any of these contracts, if you buy them, you're going to make money from the stock going down. And yes, the ones that cost more are going to make you more money. Now, if you have $400, but you don't know where to put them, you can buy one of these contracts. And when the stock goes down, when the stock goes down, the put is going to get more value, which is going to turn those $400 that you invested into maybe $600. And just like that, you gain $200 profit from one decision. And for puts, the delta is always going to be negative. Watch out for the theta, because that's how much value your contract is going to be losing every time the stock goes the opposite way that you predicted. So if you think that stock is going to go down, but it ends up going up, and you're holding that contract for the next day, then automatically the next day it's going to lose value. It's going to lose value depending on how much theta it is. So that's how you know how much money you're going to lose every single day that you hold on to that contract. Okay, now you know how to get into the market and when to get into the market. If you want to learn more about options, I have a course teaching you how to trade options and just so much more. Or you could just subscribe to my channel where I upload more content. Now, if you want to find better stocks, or you want to find good stocks, you could use the screeners, which allow you to find a 52-week low on a stock, and that might be the perfect stock to buy puts on, or maybe to buy calls on. Let's look at Target, for example. Target has reached its 52-week low, and it has been dropping nonstop. Now, what do? Do we buy puts, or do we buy calls, because it's already dropped so much? Now, these questions are going to be crucial to answering quickly when day trading, because you have to make quick decisions. And the most important decision you make is your entering position, because if you have a bad entry position, guess what? Doesn't matter how the stock does, you're not going to profit. Now, the MACD is a great way to find out when a reversal is going to shift. So maybe using these indicators on Target will allow me to get a better insight on the stock. Now, using technical analysis skills, I can use support and resistance. Now, this is something every trader should know, and it's basically a great point in knowing when the stock might bounce up or hit a rejection. Now, resistance typically causes the stock to get rejected by, so maybe I might want to buy puts there, and maybe I might want to buy calls at the support. Now, while analyzing Target, I see that it symbolizes a triple top. This is why it's very important to learn about formations as well as a day trader, because it will give us alerts on what the stock will do. And that is the best thing a day trader can do, because we will know how to act on it. Now, if you are trading SPY, I love trading SPY because so many YouTubers, so many traders do analysis of SPY every single day. So you will never not know what's going on with SPY. Now, can you know for sure what a stock will do? Never. But SPY often does follow tech. So analyzing what tech will do is a great way to find out what SPY is going to do that day. Now, one of the last things I do want to say is that the most important thing about trading is risk management. So one of the most best ways to apply risk management is to set stop losses and take profit orders before you even make the trade. So before you make the trade, set up where you want to sell and set up where you're willing to sell if your plan doesn't go the right way. I know it sounds like a lot. In reality, you just want to let your emotions take over and just hit the buy button and hit the sell button. You have to amplify that. For example, here on SPY, we see that it's about to break resistance. Now, I can wait and see if it gets rejected, I buy puts, right? But let's say it breaks through it. I'm going to set a stop loss right at 450. Now, what that will mean is that if the stock does break out from the previous high, it's most likely gonna sell off at that level. So what I'll do is on Robinhood, I'll set my stop loss to 450. Now this will allow me to have more ease in my trading. A lot of times, reasons why traders fail is because they trade off of emotion. The best way to trade is by trading by facts, not emotion. Stock can't go up forever. That's the one thing for sure that we know in the stock market. That's a fact. A stock cannot go up forever. It's gonna have to come down, and it's always gonna, if it does break resistance, that resistance will be tested again. And if that resistance acts as support, then we know that the stock has officially accepted the price as what it is. But a lot of times when a stock breaks resistance, it's going to come for a pullback, and that's what you got to wait for, because if it does bounce back from that pullback, then we know we're in a bull trend. Now, for those of you that don't know what a bull trend and a bear trend are, let me tell you a little bit about what it is. For those of you who already know, this might be a little repetitive, so I'll try and make it quick. Okay, so a bull trend is an uptrend, and that's basically when the stock is setting higher highs and lower lows. Now, for a downtrend is the opposite. They're setting higher lows and lower highs. Before you even think about day trading a stock, you need to know the overall trend of the stock. You never want to trade against the trend. If you are in an uptrend, buy calls. If you are in a downtrend, buy puts. This doesn't mean that you can't make money in an uptrend with puts, because the stock still drops, but you can make more money buying puts on downtrends and vice versa. With that being said, you could use everything you've learned in this video with the indicators and the MACD and practice that strategy, paper trading. That's everything for today, guys. If you enjoyed this video, think about subscribing to my channel. We're about to hit 16,000 subscribers. We're about to hit 16K subscribers. So let's make sure that if you're watching this video and I provided value, subscribe to my channel and I will help you grow trading.